So Kevin, you can kickstart. Thank you.
All right, good day, everyone, and welcome to this event. Wherever you are listening to us from within Nigeria and outside the country, um, my name is Kevin Alufe, and I'll be your host for this event. This event is being streamed live also on the Feed the Future Nigeria LinkedIn page. Once again, I want to welcome you to this virtual dissemination event on access to formal finance learning brief. Just to give a brief background, the Feed the Future Nigeria Rural Resilience Activity is funded by United States Agency for International Development, USAID, and this learning brief is coming courtesy of the same activity. Just to give you a quick rundown of this event, we have on our agenda where the main dissemination will be happening, and we have someone who will be leading on the presentation. His name is Nicholas McCain. He'll be coming forward to do that presentation. We'll be moving forward to having also panel discussion where we'll bear some perspectives of partners who contributed to this learning brief. For the rural resilience activity, this case that focus on the activity and learnings for interventions, especially around access to formal financial services to the participants or beneficiaries is working with through partnerships, and also focusing on aiding vulnerable populations like women, youth, internally displaced persons. It may also interest you to know, despite the inherent challenges such as cash shortage and inadequate infrastructure, the rural resilience activity funded by USAID collaborated with partners from the formal financial services sector and also community-based organization and interest-based bodies to also provide and extend financial services and empower communities economically. So, like I also said, also in this event, we'll have cause to drop our questions. Some of them might come as a result of the presentation made by the lead researcher, and also from the panel discussions. We'll also take that at some point. Then we'll go forward from there with the event. So at this point, we promise to keep this event within the time frame this event is supposed to last. And I'll go straight ahead to introduce Nicholas. Nicholas McCain is the Senior Advisor, Digital Financial Inclusion for Mexico. And he led on this learning brief to understand what the impact of the financial services intervention that has been done in the Northeast of the country, precisely across 4 states in the Northeast of Adamawa, Borno, Gombe, and Yobe states. So at this point, I would like to invite Nicholas McCain, who will lead on the presentation. I will plead with participants, please, you can drop your questions on the chat. We'll also respond, we'll pick them looking at the time we have. We'll also pick and respond to all the questions. So Nick.
And thank you, Kevin, for the very warm introduction, and a very good morning and good afternoon to you all. Thank you so much for joining us. So as Kevin said, I will be taking you through some of the key highlights from this case study, which was looking at how RRA increased access to formal financial services. And I thought we'd start just by looking at Mercy Corps' financial inclusion approach, because the interventions that we will be looking at that were conducted by RRA are very much in line with our financial inclusion approach at Mercy Corps. So I thought this provided some useful background and context. So financial inclusion, by way of introduction, works to increase people's access to and use of affordable financial services. So that's savings, loans, insurance, and remittances. Who do we work with? So financial inclusion for whom? So we target mostly in our programming rural women and youth and people on the move. These are the populations that we find are most excluded or underserved by financial services, and therefore those are the ones most in need. And we think that by working with them, we can it represents the biggest opportunities for achieving impact at scale. To what end? What are we trying to achieve? So we always say that financial inclusion is not impact, it is a means to an end. You cannot measure the impact of financial inclusion just in terms of number of loans dispersed or number of savings accounts opened. It is a means to an end. It enables people to grow their incomes. So for example, by investing in their farms or investing in their businesses, it enables them to accumulate assets, so accumulate savings, or physical assets, and to increase their agency over those assets. It also helps to build their resilience, to help them to prepare for, cope with, and recover from shocks and stresses, with the ultimate aim of supporting inclusive economic growth, improved food security, and reduced poverty. So just a brief introduction. I know Kevin just covered some of this in his introduction to the RRA activity. So it's a USAID Feed the Future funded activity for 5 years in the 4 states of Northeast Nigeria. So it's Yobe, Borno, Gombe, and Adamawa. Its purpose is to move people out of chronic vulnerability and poverty through expanded and sustainable economic opportunities. So it targets 600,000 farmers, micro, small, medium enterprises, youth, women, and children. So as we just discussed, very similar to the target populations of our financial inclusion approach. And it uses a market systems development approach to address the causes of market failure in a lasting manner. So by addressing the incentives and the behaviors and the relationships among market actors to correct those the failures, to make sure the markets work for our target participants, so those excluded or underserved populations. The 4 states face recurring and acute shocks and stresses. So rising food and fuel and fertilizer prices, particularly in the last 12 to 24 months, continue adverse effects and increasing adverse impact of climate change, so adverse weather conditions, floods and drought, continued insecurity in the area, and the negative effects of the Naira redesign policy that was sort of early last year, with a restriction on the use of old banknotes. There was a shortage of new banknotes as well, which caused a cash crunch, which really affected access to basic needs and market activities. And in this context, we see a real challenge of providing formal financial services. So 55% of adults are not able to access and use formal financial services, largely because of the costs and the complexity and the risks of providing and accessing formal financial services in this context. So to address this constraint, RRA developed and deployed 3 models to expand and improve the provision and use of formal financial services, predominantly savings and loans. So these were financial services provided by regulated institutions. That's our definition of formal financial services. Regulated institutions like bank or non-bank. So for example, includes commercial banks, microfinance banks, fintech companies, but we're not looking specifically at the provision of savings and loans through savings groups, for example. So in the first model, this was Microfinance Bank providing financial services directly to customers. The second model was a commercial bank working with a business development service provider to provide financial services to groups. And then the third model is fintech-led companies working directly with savings groups to provide financial services to them. In each of these models, RRA provided catalytic grants and technical assistance to the partners and helped create partnerships and linkages between the key actors. The case study and now in the next few minutes, we will look at each model in terms of the intervention features, in terms of actually what was done, what was achieved in terms of the results and the impact, the likely sustainability and scalability. So will this continue, and will it continue to expand once support from the program has finished, and then some of the lessons and recommendations for future programming. So looking at the first model, this is Microfinance Bank providing financial services directly to customers. So RRA supported Standard Microfinance Bank, who are a state licensed bank in Adamawa State, to improve the loan product design, to provide close training and monitoring, and to deploy digital financial services. So these are the three key elements that we'll just discuss more in this slide. So firstly, RRA supported Standard Microfinance Bank to make sure the loan product was suitable and affordable for farmers and for small businesses. So, for example, making sure that the loan term and the repayment pattern fitted the cash flow of the activity. So, for example, the agricultural activity, making sure the amount was suitable. So, Standard Microfinance Bank increased the loan amount that was available for farmers to reflect the increase in input costs. Because Standard Microfinance Bank have reached scale in many of the areas they work, they were able to keep the interest rate low at 1.6% a month, and they were also able to reduce the equity contribution. Now, this is the amount that their customers have to pay upfront in order to receive a loan. So they're able to keep this low, to reduce this from 30% to 15%. As the trust built between Standard Microfinance Bank and the communities they were serving, and they also used joint liability lending within the groups to mitigate default. And this was the reduction in equity contribution was particularly important to attract and retain female customers. So the loan product was suitable and affordable. Standard Microfinance Bank also provided close training and monitoring to ensure the loan was used productively. So before the loan was dispersed, the training, they provided financial literacy training and business development training, but also technical training on around the agricultural activities. So to help with planting and developing estimates of production. They also then, once the loan was dispersed, they monitored the loan carefully, so to ensure the loan was used for the productive purpose it was intended, to make sure repayments were made on time, and also that the agricultural activities were going as planned. So providing support throughout the planting and the growing and the harvesting period. They also deployed in order to reduce the costs and improve access, particularly as they expanded into rural areas. So they deployed 100 point of sale agents, of which customers could make deposits and withdrawals into their savings, or receive their loans and make loan repayments, and also deployed app and USSD mobile banking to improve access to accounts. So far, and what we saw with the results have been very positive so far. So altogether, at that point of the case study, 18,500 loans had been dispersed, 46% of whom were female borrowers. And this was a much higher percentage than Standard Microfinance Bank had been able to achieve up to that point. In a survey, when we look at the impact, so over half the survey participants said that they'd been able to increase their agricultural output as a result of use of the loans. And we saw that 90% of the borrowers were first-time borrowers. So that's a good indication of the increase in outreach that we were achieving and impact. So 90% were first-time borrowers. And there was good repayment on the loan. So the portfolio risk was less than 5% for 30 days. Standard Microfinance Bank have given every indication that the outreach will continue and expand in the coming months and years. They will increase their focus on digitization. So, for example, digitizing the loan application and disbursement process to make that more efficient. They will develop new financing products, for example, to help participants to purchase climate smart technologies like solar irrigation pumps and solar dryers. And put more resources into staff training. However, while the engagement with Standard Microfinance Bank was successful, RRA also tried to engage with 3 other microfinance banks, which proved more challenging. These microfinance banks were smaller scale and were experiencing leadership challenges and challenges with their portfolio quality. This all meant that they had a much lower appetite and capacity for change. So I think there's been a partnership agreement signed with one of the other microfinance banks, but not with the 2 others. So building on that experience with Standard Microfinance Bank and the 3 other microfinance banks, we're looking ahead for other successful partnerships. We see some sort of recommendations. Close collaboration between RRA and the Microfinance Bank is really important, not just at the co-creation, but also through the period of the partnership. It's important to share success stories from successful partnerships. So, for example, sharing the success with Standard Microfinance Bank with the other microfinance banks can really stimulate them and encourage them and enable them to engage and to work with RRA. There's still often a need for technical assistance to build the capacity of microfinance banks. So, for example, to help them to design and implement new strategies and products and processes, and to help them to digitize as well, to reduce their cost to serve, improve their customer experience, and more advocacy to the state leadership as well. They're the ones who are, that's with the ministry that coordinates state level microfinance bank, so more advocacy and engagement with them. So that was the first model. In the second model, this was a bank working directly with a business development service provider to groups. So in this model, RRA facilitated a partnership between a commercial bank, in this case FCMB, and a business development service provider, CMD. And in this model, CMD acts as an aggregator of FCMB, which has 2 components. The first is around loans. So FCMB disperses loans to CMD, who then on-lends them to farmers and to MSMEs. The second component is CMD acting as a master agent to recruit and manage POS agents for FCMB. And so this model was really proved to be, as we had hoped, a win-win partnership. So utilizing each other's resources and presence and experience. So, for example, FCMB had access to relatively low-cost donor funding for lending to smallholder farmers, but they didn't have the presence or the experience of working directly with farmers, whereas CMD did have that experience, did have that presence in rural areas of working with communities, working with smallholder farmers, but they lacked access to low-cost capital, which they could access through this partnership. So RRA nurtured and supported the partnership as FCMB and CMD worked closely together. Again, there were 3 key components. So this enabled FCMB and CMD to provide tailored, affordable loans and support and training to build the trust between FCMB and the community, and the capacity of the community to access and to use those loans productively. And so similar to what we saw with Standard Microfinance Bank, CMD provided close support and training around financial literacy training and technical training. Again, for example, to create estimates of production and then train support throughout the planting and the growing and the harvesting season. Then also make sure their loans were the amounts were suitable. The repayment periods were tailored to the cash flows of the businesses and the harvest. And then also they were able to reduce the cash collateral requirement through the use of joint liability lending and by bundling agriculture insurance with the loan as well to mitigate risk. CMD and FCMB worked very, very hard to ensure timely disbursements and access to inputs and markets. Both of these are incredibly important. Timely disbursement, particularly for agriculture activities, you've got to get your inputs, you've got to get your seeds and your fertilizer at the right time. And so CMD were able to address any delays as this occurred. So, for example, providing inputs on credit if necessary, or providing a pre-loan to petty traders. And they also help to contract with input providers and off-takers and buyers. They linked them to the smallholder farmers and helped work with the farmers to aggregate the demand and supply across farmers groups to make sure that farmers could access the inputs that they needed and to access profitable, reliable markets. They also use digital financial services. So CMD deployed 8 POS agents. Again, that improved access to accounts. So the farmer groups and the MSMEs were able to deposit and withdraw on their accounts at local POS agents. So far, the results have been very positive, and we hope will be replicable. So CMD were able to disperse 300 loans, the majority of which were to women. And at the time of the case study, they expected a good harvest with good profit margins for the farmers. There's a hope and expectation the partnership with CMD and FCMB will continue and will expand. So CMD and FCMD are integrating their systems, which should help to improve the speed and reliability of the loan application and loan disbursement process. And they will deploy more POS agents as well to help mobilize savings. I mentioned the dependency or FCMB having access to low-cost donor funding, which meant they could then provide this low-cost funding to CMD to on-lend. So there's a question mark as to what extent this model is dependent on this. And for example, if this was removed, to what extent it could continue. So similar to Model 1 as well. So this partnership with CMD worked very well and hugely successful. RRA had partnerships with 2 other business development service providers which were less successful. And this really pointed to the business development service providers, as the name suggests, provide business development services. So consultancy, for example, around marketing or product development or strategy, and they're not so much involved in the direct provision of financial services. So this can be a challenge to business development service providers who actually find themselves in the position of providing and managing credit themselves. So just looking ahead in terms of lessons and recommendations. So it's so important to build that trust between the bank and the farmers, particularly for first-time borrowers. There's often a need for technical assistance to business development service providers, particularly around the management of loans. If they're to be a loan aggregator, to make sure, for example, they understand the loan terms and the conditions of the commercial bank of FCMB and able to disperse those loans and manage those loans effectively. In this model, we saw that the BDSP carries all the credit risk. So, for example, if the farmers default, then the BDSP is still responsible for paying that credit back to the bank. So, is there a need in this model to help mitigate that risk further? I've talked about the potential importance of the low-cost funding. So there is probably almost certainly a need to help business development service providers to access low-cost capital for on-lending, and then also probably a need to review maybe the way the agreements between RRA and the business development service provider are structured. So, for example, to make sure the loan disbursement, sometimes the loan disbursement targets were very, very high. So to make sure they're achievable, that they are perhaps phased or there's a pilot period to make sure that the capacity is built, and an emphasis on repayments or not just on disbursement. And all the agreements were always for 12 months. And often for a BDSP, they need to build their capacity to become familiar with lending. Maybe that could be very longer. So a need for flexible durations. In the course of the partnership, CMD created or helped organize a savings and credit cooperative, a SACCO. So this was owned and managed by members with technical support from CMD, and helped to address the need for savings and loans and help address the need to access agricultural inputs and markets. We thought we'd just look at this because it's a good example of sort of, I suppose you like, informal or semi-formal rather financial service. So there were some successes. So they mobilized from the members 11 million naira worth of savings and provided a share out of 2.5 million. However, there were challenges. These are challenges we often see in SACCOs. The challenges to sustainability and scale. So there was a lack of deposits from members. One of the key drivers was the Naira redesign policy. Again, there was a restriction on the use of old banknotes. There was a shortage of new banknotes, which caused a real cash crunch. So members lacked savings in order to deposit and tended only to deposit when they wanted a loan. And then there was a very high demand for loans because most members were involved in agricultural activities, so they all needed a loan at the same time. So there was insufficient deposits to meet the need for demand for loans. There was also a lack of fees. Members were reluctant to pay the fees that were levied on them, and so there was a lack of fees to cover the operating costs of the SACCO. CMD are continuing with the SACCO, and we will continue to watch and to monitor and to report on how this intervention is going. So the third and final model was fintech companies providing financial services directly to savings groups, primarily to digitize those savings groups. So in this activity, RRA partnered with two fintech companies. The first was RRA Financial Services, who provided digital access to digital wallets for groups through their co-banking platform and their POS agents. So groups would open a wallet through the co-banking platform and then make deposits and make withdrawals into that group wallet through the POS agents. And also, as this activity built up, RRA were able to provide loans from their financial partners, so from commercial banks. The second model was working with Microfinance, who provided a digital ledger to digitize the record keeping. So in this model, transactions were still done in cash, but the record keeping was digitized through the use of an app on a smartphone. And in this, Microfinance worked with local partners of Rindev Consulting, who were the on-the-ground implementing partners, who, for example, deployed village agents to support the registration and the onboarding of groups. And Microfinance are also working with MNOs and with local banks on integration. So in terms of results, so initially, certainly with RRA, it was very encouraging. So 1,500 groups were onboarded, 11,000 accounts were opened with financial institutions, so with banks, and then 143 loans were dispersed from commercial banks to groups. However, we didn't see continued usage and loans once the partnership had finished. So just in terms of usage of the platform, there were challenges with network. So particularly with the 3G network, there was charges to withdraw from the group account, which was not popular. There was a lack of availability of POS agents, so they weren't available, for example, at all meetings all the time. And there was a lack of trust. Often the groups preferred to keep the money in their hands or in the locked box rather than depositing it with the POS agent. In terms of the loans, so these loans were dispersed, but they experienced very low repayment rates. There seemed to be an evidence of a perception among members that these loans were grants. That may have been due to the key role that RRA played at Mercy Corps being perceived, O'Reilly as an NGO and therefore a grant disperser. We also dispersed cash transfers as a part of the COVID response, so that may have confused the message. Groups may have thought the loans were not for repaying. And there was a lack of training and monitoring. So groups were given one-off training, but not really monitored and not really supported once the loans had been dispersed to make sure that they were used effectively and that they were repaid. Cashbox have registered 571 groups. The point of the case study in November, 500 were active. This has now fallen to 292. Mainly any groups shared out in December and have been slow to restart. Talking to the groups, there seems evidence that it does help them improve record keeping. So record keeping is often one of the most challenging activities within a savings groups, and so this really helps to improve the accuracy and the transparency of record keeping. And Cashbox are also working with an integration of just completed integration with MTN to allow participants to make deposits and withdrawals through their MTN mobile money. In terms of the lessons and recommendations, there's really a need for a compelling value proposition. So groups need a clear, compelling value proposition. We see this in terms of the improved security and convenience and accuracy and transparency and affordability of their group activities. Also, the importance of accessing credit as well. And so what we're determining is, for example, will they use these apps if there is no access to credit? And so we're continuing to evaluate this. There's no doubt there's improvements, but whether this compels them to continue using it is a question. We'll continue to look at this. And when credit is provided, there's a real support for training and credit assessment and supervision. So I've talked in terms of high tech, high touch. So, for example, we see with standard microfinance banking models 1 and CMD model 2, this close supervision, close support on the ground. So, for example, Cashbox have these village agents. They will be key in making sure that credit is used correctly and repayment rates are high. The partnership between RRA and the companies may require longer partnerships. So again, they were standard 12 months is the way to make these longer where necessary. and to make sure that RRA ensure the right level of visibility with groups, to make sure that our presence doesn't confuse this message. Is it grants or is it loans? So those are some of the lessons and recommendations. That's my final slide. Thank you very much for listening. I've provided a link to the case study. I will drop that in the chat now for you to access the full case study. And I will hand back now to Kevin to facilitate discussion with partners.
All right. Thank you so much, Nicholas. That has been a very, you really summarized it very well. I know that document is about 6-7 pages or more. And your presentation has given us the synopsis of what that brief is all about. Just before I continue, I would like to reach out to some of our participants on our LinkedIn live page and also those who are joining via the team call. Please, I know there might be some questions for Nicholas. You can drop them in the chat. For those who are on our LinkedIn live page, you can also drop those questions. We'll pick them as time goes on, and Nick and members of the panel will also respond to them. So Nick has dropped the link to the brief. You can also take time to also look through, get some very beautiful details inside that brief. We'll go forward now. We have, just as I said initially, we have a panel of discussants, and on the panel we have those who have contributed to the results that we're seeing on the presentations made by Nicholas. So I'll be introducing them before we commence the question session. We have on the panel Dr. Abraham Asongo, who is the Chief Operating Officer of Standard Microfinance Bank, based in Adamawa. We also have Mr. Gregory Ekanem, who is the team lead, agribusiness channels and liabilities from First City Monument Bank, that's FCMB. We also have Mrs. Edna Ishaya, the Managing Director of Center for Micro Enterprise Development, CMD, based in Gombe here. We also have on the panel, last but not the least, but we have Mr. Okpeyemi Uriniowo, who is the Principal Partner, Rindev Consulting. If my panel is ready, we'll kickstart with a question. And please, like I said, if you have your questions, please just drop them in the chat. We'll pick them and we'll direct them to whoever the question is directed to. So my first question, Mr. Dr. Asongo, can you hear me?
Yeah, thank you, Kevin. I can hear you very well.
All right, thank you so much for giving us your time. So this is like getting your perspective. You've seen from the presentation made by Nick, and also seen the contribution that Standard Microfinance has also made. Standard Microfinance has evolved over time, tailoring their products to meet the needs of vulnerable populations in the Northeast, precisely Adamawa. So I want to get your perspective. Now, one of the biggest challenges now is going forward is enabling vulnerable populations to adapt to the impact of climate change and also build their resilience in the face of climate shocks and stress. So from my own side, how are you addressing this? That is one. Then two, and what role is there for donors and agencies like Mexico on the rural resilience activity going to play in also achieving this? Thank you.
All right, thank you, Kevin. First and foremost, I want to thank Nick for that wonderful presentation that captured very well the activities of rural resilience in Standard Microfinance Bank. I want to start by saying that the effect of climate change is very glaring in the Northeast Nigeria. For example, this is about 11:30 a.m. and it's quite warm here. The temperature outside is almost 43 degrees. So you can see that it's very glaring. And we have very short rainfall, and we experience this drought. And within even a short amount of rainfall, we do have excessive flooding. Example of what happened in 2023, and the major one was in 2022. So already we have a serious effect of climate change, and that necessitates the effort of Standard Microfinance Bank to bring in climate smart financing to our smallholder farmers. So going straight to your question, what is Standard Microfinance Bank doing to address this? Two things. Number one, we start by awareness creation. We are beginning to incorporate in our training module the effects of climate change, try to explain to our beneficiaries, the smallholder farmers, to know what are the activities that constitute to climate change, like in their course of farming, talking about bush burning, talking about the application of fertilizer. You know, we are trying to incorporate that to create awareness, to let the smallholder farmers in the rural areas understand that some of the activities they are doing can constitute a danger to environment resulting to climate change. So that is what we are doing currently. And number two, we have developed some financial products tailored to mitigating climate change. For example, number one, we are piloting the financing of solar pumps right now instead of farmers using petrol, which you know that the emission of carbon is dangerous to the environment. So it's part of what we're doing. Also, we have introduced green energy financing to households, trying to make them shift from the use of maybe kerosene lamps or other or head means of lighting to using clean energy, which also is part of what will save the environment. We have also developed financial products for those that are into waste management and waste recycle, which are also helping to protect the environment. Is part of what we're doing to address that issue. Now, coming to smallholder farmers, we are looking at giving them loans to finance drought-resistant crops. Since we have very short rainfall in the Northeast, they need to go for seeds that are drought-resistant, so that in an event where rain ceases for a couple of weeks, couple of days, they will still benefit. And we are taking insurance as something very paramount, so that the effect of climate change will not result to total loss of crops. In an event where it happens, insurance comes in. So these are the financial products that we are putting in place to ensure that we make the rural areas to adapt to climate change. One good thing which we have done, I think by December 2023, we distributed over 2,000 trees to our customers. If you visit our social media page, like LinkedIn, like YouTube, and like Facebook, you will see some of the colorful pictures and short videos which we did, which is part of our social intervention to making sure that we mitigate climate change. Now, coming to the last aspect of your question, what would the donor organizations like Mexico do to foster this? I would say we thank Mexico for the intervention in the past, leading to over 18,000 loans which were given, talking about more than 2 billion naira. But this is a new phase entirely. So giving the technical assistance is key. This will include capacity building, because we are a financial institution. There are many areas that we lack the expertise to make sure that we deliver services outside the scope of maybe giving money, collecting money back. So our integration or our partnership with organizations like Mexico, we have built the capacity of our field staff so that they will know how to deliver this product of climate change effectively, and also enhance their capacity to train the farmers, the beneficiaries very well on the modalities they need to adapt in their respective communities to overcome climate change or to reduce climate change. And also, of course, various aspects like advocacy, like speaking to the government agencies, and then even bringing maybe consultants that we help in developing some of these products, fine-tuning them so that it will become effective and beneficial to the participants. Putting hands together, I'm sure that we will mitigate climate change and make the beneficiaries to adapt to the reality of what we have at hand. Thank you very much.
Thank you so much, Dr. Abraham. I'm sure I've seen the questions coming in. I know there will be some of them you'll be willing to respond to those questions. And so I'll plead with our participants, please keep those questions coming in, and whoever it is directed to answer those questions. So my next question goes to Mr. Gregory Kanem, who is a team lead for agribusiness channels and liabilities for First City Monument Bank. Mr. Greg, if you're online, I'll be ready to ask you just one very key question, and you bring your perspective to it. So if you can hear me, please confirm if you can hear me, Mr. Greg.
Yeah, I can hear you, Kelvin. Yeah.
Okay. I don't know if you can put on your camera so that our viewers can also put a face to, yeah.
Okay, yeah. I will just do that briefly
okay.
Because of network, so it doesn't affect the quality of.
All right. Thank you very much. While your video is still coming up, let me just go ahead. So if you look at the presentation made by Nick, the name of FCMB kept coming out, and you being a major formal financial institution that has provided access, you have also you looked at the Northeast and the populations in which the rural resilience activity is working with, and being able to adapt your financial products. So thinking about your partnership with Center for Micro Enterprise Development, CMD, what will you continue to do? Will you continue to do the same thing or do something different? Or will you move forward? That's one. Then secondly, what other models do you think FCMB can use to scale up provision of financial services, most especially to farmers and MSMEs? Yeah.
Okay, thank you so much. I think currently we're doing well with CMD, and we just need to build on what we are currently doing, and possibly also look at areas that we can improve on, specifically to scale up operations. Particularly was looking at probably sitting with CMD to really come up with tailored financial products, that meets the individual needs of the farmers. That will be engaging CMD in the next few weeks to discuss this, so that we can tap into a larger market there. And also, we also will, engage in training and capacity building program and some outreach initiative in collaboration with CMD. One other areas that we consider if we, that we're looking at critically is leveraging technology to scale up operations and reach more farmers, customers efficiently. And so we've already started discussions on how we could integrate CMD's platform on our banking as a service platform to enable them perform, provide basic financial services, especially if possible, also look at online loan applications in order to streamline processes that improve accessibility. Other areas that we also consider is utilizing data analytics to gain insights into their clients' needs and behavior, enabling us to provide more targeted and effective financial services. I believe by analyzing data on client demography, transaction history, and repayment pattern, we'll be able to, help us come up with tailored offerings and improve overall outcome. We are working with some organizations like Rabobank and the rest of them that on a platform that will enable us provide such services, and I'm very much CMD is very much on our mind, and we believe that by the time we finalized, you see greater efficient delivery of services and also swiftly, timely delivery, especially considering the class of customers that we are working with and the nature of business, which is it requires a timely delivery. And we're also looking at exploring opportunities to collaborate with other organizations, NGO to expand reach and impact. I believe that if we form, strategic partnerships, we can tap into additional resources and expertise and network to better serve the target market. We all know all those institutions that bank was getting cheap funds from, like the CBN no longer providing funding. So banks these days are like we're looking at external source of funds to be able to keep interest rates at affordable percentage, and we want to still keep it at the level we're engaging with CMD, and see how much of the customers we can support. So generally, I think our engagement with CMD it's been very successful, and both parties are playing their role efficiently. And I think we are beginning to expand recently than when we started, and we are hoping we will leverage on that partnership and other partnerships from the relationship with Mercy Corps to sufficiently penetrate that market. Thank you. I hope, thank you very much.
Thank you, Mr. Great. That's I think some of the questions that are on the chat, you've started responding to them. However, I will pick out some aspects of the questions that were not touched, and I'll still bring them to your attention. I'll quickly take some questions now. This question is for Dr. Abraham for Standard Microfinance. Dr. Abraham, there's a question for you, and this question is targeting, looking at, is there an expansion, any expansion plan beyond Adamawa State, and what will be needed for the kind of expansion? I can see you're laughing. Yeah. So.
Yeah, thank you very much. I like the question, because when somebody says what is needed, there's likelihood that he's willing to maybe give a support. Based on the Central Bank of Nigeria requirement, We have a unit microfinance, state microfinance, and national microfinance. So currently we're on a state license, which require capital of 1 billion for you to operate in the state with branches. So that is the level of license we have now. So for us to operate outside Adamawa, you need a capital base of 5 billion naira to do that. I'm happy to say that that process is ongoing, and hopefully it will be completed in a short time. You'll begin to see our branches in every part of the country. So I'll be very happy to to receive contribution from whoever is asking that question. Thank you very much.
All right, thank you, thank you. I think there are still questions on expansion, but I think you've touched on that. So this next set of questions, Nick is still on the call. You might also respond to it, Dr. Abraham. Nick, at some point you also respond to the question, and as much as possible, Mr. Greg could come in. So there's this very key question that came as a result of Nick's presentation, looking at the trends, knowing full well that we're in the Northeast, looking at the trends of header communities and the lack of interest in account opening and the likes. How deliberate can we mitigate that perception? Looking at the kind of communities that we operate in the Northeast, and that perception, and also provide some form of access to finance for them. After we've done a lot of work around that perception, then also, how have we seen how the effect of Naira redesign and the cash shortage has affected their trade? Because I know you have worked with these farmers, and also at some point people who are into livestock also. How have you able to, what has been the effect and how were you able to mitigate it? Then lastly, what do you recommend? So I think I'll start with Dr. Abraham first. Then if Nick has to bear his perspective on that, then next will be Dr. Mr. Greg Ekanem. Dr. Abraham?
Thank you, Kevin. I want to start by saying that access to finance in the Northeast, for people to accept your services, products and services, first of all, you must actually develop a product that meet the needs of the people. I can tell you that for every year we increase not less than 2,000 new customers on a yearly basis for the last 10 years. We have over 150,000 customer base, and we keep growing. So when you develop products that meet the needs of the people, that they can boldly say that, yes, I partner with Standard Microfinance Bank, and this is what I have, or I partner with X institution, and this is what I gain. There will be no question of people being reluctant to open bank accounts. So that is very key. And in the Northeast, the spread of financial institutions is very, very low. So what we are doing as a bank is, out of the 12 branches we have, only 3 are within the city. The 9 are in remote areas where there are no formal financial institution at all. That also has given us an edge, making more and more people to come to our institutions to open formal bank account. The issue of headers, farmers crisis, yes, is a well-known issue in the country, and not only in the Northeast, but now it's spreading across other regions of the country. What we do, as I mentioned earlier on, we make sure that for every farmer that gets money from Standard Microfinance Bank, your farm must be insured. It's a must, because we know that there are various factors that can contribute, making a farmer to lose everything. So that insurance helps us, and I can tell you that over the years, we have farmers compensated for the loss they have suffered. So then finally, the recommendation for making more and more people benefit from financial services is gradually moving away from the bricks and mortar branches, physical branches, to technology, going digital, so that somebody who is in a very remote area may have a mobile phone, whether Android or analog phone, will be able to use those services. Like Nick mentioned, we have introduced USAID, that wherever you are, provided you have mobile network, you can just dial a code and make a transaction, or walk just a few meters away to get a Standard Microfinance Bank agent to make deposit or withdrawal. So these are the recommendations I can give to other institutions who are operating in the Northeast as well to make a real impact. Thank you.
Thank you, Dr. Abraham. Nick, do you have some perspective to this question? Yeah.
I'm just conscious of the time, Kevin. No, yeah. Just I think Dr. Abraham summarized it very, very well. But just to make sure that we are providing suitable services, so that's savings, credit, and insurance as well. So and trying to make sure that they are tailored to the needs of those communities, and using technology where relevant, really, to try and reduce the cost to serve. But no, I think Dr. Abraham summarized it very well.
All right. Thank you so much, Mr. Greg. Do you have any perspective to this that we can?
Yeah, we currently are doing a lot of that. Partnership with CMD and a lot other organizations through the Mercy Corps partnership. We leverage on the structure where we profile the aggregators as FCMB master agents and work with them to deepen access to financial services. These are especially during the insurgency, where we resorted to using local indigenes to provide financial services, and we're still able to penetrate those areas that were having issues of insecurity, and that's been a model we're adopting, and it's working, and we'll keep scaling and improving on that. And what we're now doing is we are leveraging that same structure to provide financial support to farmers, and including insurance services, and a lot more other services. And we are concluding arrangements to also deploy access to inputs and mechanization services via rural agents, where the farmer can have a touch point in the rural community where they can request for tractors and farm inputs. And we are already beginning to see organizations coming in to support to ensure that would lower the cost of providing such services. So yeah, we are FCM is well positioned to support the rural farmers. Thank you.
All right, thank you, Mr. Greg. So unfortunately, we were not able to get two of our panelists due to network, and apologies for that. Sometimes network could work against, and these panelists are coming from different locations. So what I would say now is, before the vote of thanks, who will be given by the Deputy Chief of Party for the Rural Resilience Activity. The Rural Resilience Activity uses events like this to share lessons that we've learned, most especially for this access to finance and the importance of tailored solutions and an ongoing support with what we are doing in the Northeast. This also highlights the fact that we are also sharing what we as an activity have learned so far, and also highlights the approaches, the unique approach that we are using across our intervention in the Northeast, and also what we can also do differently in whatever we are doing in the Northeast. I would like to, before we wrap up this event, I would like to call on the Mr. Nurain Abdul Fattah, who is the Deputy Chief of Party for the Feed the Future Nigeria Rural Resilience Activity, who will give us, appreciate our participants and our guests. Mr. Nurain.
Thank you so much, Kevin. let me start by appreciating Nick for leading the whole process of putting together the learning brief. And I also want to thank you, Kevin and Raf, for leading the process of organizing this event. And of course, for our panel members, we say a very big thank you. We've been together with you from day one, trying to implement all of these business models that make financial products and that improve the access of our farmers and micro enterprises to financial products and services. Secondly, a very big appreciation to USAID for making their resources available to the Rural Resilience Activity Team to implement pilots and scale some of these business models that have proven impact at the household level in Northeast Nigeria. And to our attendees, particularly those who are operating from the supply side, the financial service providers, these are learnings generated from rural resilience activity. Please pick up this learning brief, go through them, review them, ask questions. Where possible, replicate some of these business models, modify them, add value to them in a way that suits your business, and roll out a lot of products and services. One thing I can assure you is that the demand side are very much ready to receive your product as long as it is tailored to meet their needs. And for our attendees from the demand side, I want to say thank you for joining this conversation. There are tons of financial products and services around you. Reach out to the Rural Resilience Activity for more information, and we'll make available some of those products and services around you. For those of you who are especially within Northeast Nigeria, weigh them, go through those products and see what fits your business, what fits your agribusiness, your farming, your micro enterprises, among others. Generally, I will say thank you once again. And this is just one of many learnings that have been generated from rural resilience activity. There are many other learnings in the agri space, our climate resilient interventions, issues of use of technology, among other things that align with the objective of rural resilience activity. So I would say stay tuned for more learnings from RRA. Thank you, and over.
Thank you, Mr. Nuren. That's a very good way to wrap up this section. Just like he has said, you can also reach out to us on our LinkedIn page, where we have a lot of resources and write-ups that we are putting up there on our impact and whatever we are doing within the Northeast. Like as he said, you can pick up some of these models that we have implemented and has worked in the Northeast, and see how you can tailor it to suit your own business pursuit. From my side, as the host of this event, I want to thank you all for being part of this event, and look forward to further engagement via this platform, where we'll share learnings and what we've learned so far. Thank you so much, everyone, and see you next time.
Thank you, Kevin. Great job.
Thank you, Dr.
Thank you, everyone.
Abraham.
Goodbye.
Thank you.
Thank you, panelists. Thank you, everyone, for joining. Goodbye, everybody. Let's do this again next time.